rand holding below that 6 rand 90 mark against the dollar. So it looks like we had that risk appetite that started building in the middle of last week holding, and of course that's a dollar weakness on Friday also helping to propel the rand.
Good morning, Stephen. Yes, you're right. It seems like the rand is continuing with its stronger bias that we've seen from midweek last week, and that was mainly because of a combination of factors. Firstly, we had news that a local bond auction was successful, and secondly, we also had PMI data at the end of last week, which indicated that South Africa's PMI data, as well as Russia, China, and Brazil, were much higher than expected, and that is positive for the rand from a GDP differential point of view. And thirdly, as you've said, we also had the dollar weakening, and it was weakening on the back of two factors. Firstly, we had Euro authorities also coming out and also committing themselves to trying and soothe fears of contagion effects in the euro area. And secondly, we had payrolls data which came out on Friday, and those numbers came worse than expected, and that also ensured dollar weakness at the end of last week.
And of course we had the gold price shooting about $1,400 an ounce, oil also up. Of course that gold price must also be helping to support the rand to some extent.
Yes, no, definitely. I mean, we also had not only the gold price, but it seems like general commodity prices have also shot up this morning, and that was also on the back of the dollar weakness.
Of course, just looking forward to this week, nothing much out today, but we have gold and forex coming out tomorrow, quarterly bulletin on Thursday, and that's going to be key for the markets. Perhaps starting with the gold and forex numbers, do you think we're going to see more signs of the SARB or the Treasury having accumulated more reserves?
I mean, for the November numbers, Stephen, we had the rand weakening quite a lot during the month of November, and we believe that should have limited the scope for the Reserve Bank to accumulate reserves. And when we look at the valuation side of things, we had the dollar as well as the pound depreciating during the month of November. So that means that from the valuation effects, we're not going to see a lot of valuation effects affecting the reserve accumulation. But then, the FX reserves numbers are quite important, especially given the fact that the National Treasury has also been committed to accumulating reserves to help the Reserve Bank. So for tomorrow's data, we're not expecting much increase in the reserve data. We're expecting net reserves to rise modestly to around 43.2 billion in November from 43.1 billion in October. So we are just expecting a modest rise in FX reserves tomorrow.
And what will you be looking for in that quarterly bulletin on Thursday? What's going to be the key numbers that Standard Bank will be focusing on there?
For the quarterly bulletin, Stephen, there are two most important data that we'll be looking at. Firstly, we'll be looking at the GDP numbers for the third quarter from an expenditure point of view, and those numbers will be really important to give us an indication of the contribution of household expenditure as well as net trade and investment, and how those those numbers did in terms of contributing to GDP. And we are also expecting balance of payments numbers for the third quarter. And from the balance of payments numbers, the most important data there will be the current account deficit. And Standard Bank, together with Bloomberg consensus, is expecting current account deficit of 3.2 billion. 3.2% of GDP, and that's up from a deficit of 2.5% of GDP.